We were talking about the pressure on the resources. I wonder if the same is happening for our next topic, zinc. Mark Lackey is Executive VP of CHF Capital Markets, and he joins us now. You would know.
Yeah, that's right. Well, today zinc prices are hanging in $1.04, Pat. They haven't changed. And, I think it's a market that I believe is so tight right now that it's always going to be better for all commodities to go one way. That doesn't happen, as we both know. But I definitely think that the zinc market's poised to see higher prices here. We're calling 125 at the end of this year, and we haven't changed our view in 6 months, and 150 at the end of next year, and $2 at the end of 2016. So I think this is actually
almost a double by 2016.
That's right. And the only other commodity I've got doubling in the same time period is uranium. The difference is zinc's moving in the right direction right now. It's gone up 20 cents since our last discussion. Obviously, uranium's been dead in the water in the short run. But we see a number of reasons, Pat, on the demand side why zinc's doing better, particularly in the steel industry. Zinc is used in primarily autos and construction, and that's part of the steel industry still doing quite well, as we both know. And secondly, the use of zinc now in fertilizers is growing. And it's actually quite positive, Pat. We've seen
that's regional, isn't it? Fertilizers is regional, more important in Asia, for instance.
It is. But it's growing nicely. And people say, well, how big can that get? Well, it's, we're talking China, we're talking India, we're talking Indonesia, we're talking Pakistan. These are all big growing countries. And what you're seeing is the zinc deficient diets are bad because it's really bad for people's stomachs and other ailments. And that's getting taken out by having just enough zinc in there, and they're not zinc deficient anymore. So there's a growing demand for zinc even in that market. Now, still the biggest market will still be galvanized steel, obviously, and we feel pretty good about where China's going in terms of auto production, construction. The same thing is true in India, the same thing is true in Indonesia. So on the demand side, we see a very strong zinc market here over the next couple of years.
A lot of people are saying all the construction, there's not going to be the same growth in construction in China. And a lot of people are being urbanized. Where do you see the demand coming from if it's an urban environment?
That's actually quite positive, Pat, because when you move people from the agricultural areas to the urban areas, your zinc intensity actually goes up. Because think about it, how many construction buildings do you have kind of in the agricultural areas, small towns and farming communities? You don't really use a whole lot of zinc.
Right.
But you use a lot more zinc in the cities. And since 20 million people are moving
what? Like what?
Well, for example, just some of the construction we're talking about, whether it's pipes, water pipes.
But it's all been built. A lot of it has been
some
built
of it,
already.
Pat. But if I add another 20 million people, there are going to be some cities where I still have to build more infrastructure.
Right.
To suggest that it's all done. And now we can also point out that in some cities there are some vacant buildings. People haven't always moved to the cities quite the way that maybe the Chinese government was hoping. But they can do things to change that in terms of offering incentives and so forth. But it's quite clear, you're getting the same move in India now with the new government. They're trying to encourage more and more people to go to the cities and to get off these, subpar agricultural lands, because they can live better lives. So, the studies have clearly shown, Pat, that zinc intensities and some of the other commodity intensities do rise as you have more urbanization. As much as 2 to 3 times more zinc per capita is used in the urban centers than in the non-urban centers.
Okay, that's the demand side. What about the supply side? You and I have talked about this before.
And
a lot of mines shutting down.
And that's the key, Pat, is that people who keep saying to me, well, I see $1 zinc down the road. Well, if you look at what's happening in supply, Pat, we're closing 3 of the biggest mines in the world. In fact, Brunswick has already closed in New Brunswick, Lachine in Ireland, and Century in Australia, plus 7 other relatively smaller mines. And there's a few new mines coming on, but the supply is not going to keep up with the demand. Inventories are now at, a 20-month low. And the price of zinc today at $1.04, that's actually a 3-year high. So while zinc's been kind of like a number of commodities that hadn't done much for the last few years, I think we've really definitely hit an inflection point here.
Okay. Now, your recommendations. One of them we've seen before, but 2 we hadn't.
Right.
PASINEX Resources.
Right. Now, the reason PASINEX caught my eye, Pat, is that first of all, I like Turkey. Turkey is one of the growing economies in the world. They're now the 8th biggest steel industry, moved up from 12th. They've almost caught the Germans as number 1 in Europe. And it's growing continually in Turkey. And the advantage there is the zinc that you mine in Turkey will be used in Turkey. You're not going to have to ship it to China and pay those high shipping costs. So all the infrastructure is in place. So PASINEX has some interesting properties. They just started to drill one of them, and the results in June were quite nice. For the first drill holes, there were some very good holes that they pulled for zinc. So this is now on my radar screen. I like Steve Williams, solid guy, good zinc background, good management team. And I think if you want to buy a greenfields play in Turkey, this is a really good opportunity for you, because he's going to develop this over the next next couple of years in tandem with higher zinc prices in a very good market in Turkey.
Yeah, so they don't actually have a mine.
They don't.
What
no.
about Silver Met Incorporated?
Okay, Silver Met actually has some production, Pat. Now, this company's chairman, Steve Roman, I think everybody who knows anything about mining knows the Roman family. Steve, I think, has been a real winner in his career. You only have to look this year at his uranium company, his gold company. It hasn't been the greatest markets, and yet his gold stock, his company's up threefold. His uranium company's done a double. So he's had a really good performance. He's done well in copper. He's done well in oil and gas. This zinc play has been kind of a bit, off the radar screen for a lot of people, because actually what they do is they recycle zinc here. In other words, they're taking zinc out of dust and out of dirt and they have a kiln and they have a process that they've now perfected where they can develop zinc concentrate. Now, they really like to see it around the dollar level to do quite well. Well, we're at $1 now. People are now getting interested. They just announced the other day they're going to expand that facility, plus they're going to build a new one. They have the financing in place. So I think this is a great leverage play to the price of zinc, because if I'm correct about where the zinc price goes, this is going to be a company that's going to print money. And again, it's in Turkey, so I like the fact that they've got a ready-made market. They've actually signed up with 5 steel companies. Recently.
Okay, and Vendetta is, I believe, an iron zinc company. We've talked about it before.
And now Vendetta, Pat, trades at 35 cents right now. The stock has been halted because they're doing an additional deal in Australia. The OSC, of course, says you don't trade until you get your deals done and finish the financing, and that's fair. We think that, I wanted to recommend it today, Pat, because my concern was that if I'm back on in 7 or 8 weeks doing zinc again and the stock's back trading, it could be at a higher price. So now, on the other hand, you can't buy it today in the open market, but they are doing a financing. I'm not the agent, but I'm sure if you talk to the company, there's some financing still available. I think this financing closes next 2-3 weeks and gets back trading again, and then they're going to have the Australian property. I like Australia, Pat, because of its proximity to China. It's a great place to be because shipping costs are low, and of course Australia has some excellent infrastructure, particularly in that part of the country.
Mark, great to have you here.
It's great to be here, Pat.
Mark Lackey, Executive VP, CHF Capital Markets. When we come